Alright, so in the last video, we learned about understanding the primary trend, understanding how to find sectors, how to narrow down further, and we learned about some of the tools which you can use. I also gave you some of the practical case studies example of how we could have picked a defense sector. Again, not a recommendation, but just to understand how it is done. Now, the next segment, what we are doing now is we are going to learn a powerful formula, which is my brainchild, which I have also covered in my book. It's my proprietary formula, which I have discovered being a mechanical engineer. So this formula is called machine formula. All of you would be knowing machine. You might have seen things around you. Anything around you is mostly machine. Whether it is the computer which you are seeing, or a laptop, or a mobile phone, whatever you are accessing this data from, or the fan, or the electricity going into your refrigerator or AC, everything is machine around us, right? So how to make sense of this machine in your investing journey? So if you see the slide, the acronym for this machine stands for these 7 parameters which are very critical for any business analysis. Again, this is my way of doing things and my way of analyzing things. It differs from investors to investors. Each investors have their own preferences of what kind of parameters they want to look for. So treat this as a starting point. If you feel you want to do any tweaks around it, most welcome. So the first thing which we need to understand, M, which is mega trends or mega tailwinds. So if you want to compound for a very long period of time, you need to understand that there could be some structural mega trend which you want to play. It could be digitalization, it could be formalization of economy, it could be urbanization. So if your company is a beneficiary of multiple of these mega trends, then there are high chances that your company can compound for a long period of time. So that is the first very powerful thing which you should know in your journey. The second important thing is demand. Okay, so if there is strength, if a lot of people want to buy that company, generally there is something good about that company. Meaning, if many of the shareholders are willing to pay price and they are queued up to buy something, there is some information around it. Particularly if it is showing a lot of strength, say market is falling and that stock is very, very strong, it means something. There is some demand around it. Now, you don't need to blindly buy any stock which is making new high or which is strong, but it could be a good starting point to understand, hey, what is happening in this company? Is there anything interesting that is going inside this company? Third very powerful thing is called competitive advantage. What is competitive advantage? Competitive advantage is something which keeps competition away for your particular business or stock. Now, let me give you certain examples of competitive advantage. The first competitive advantage a company can have is a strong brand. So if you understand Nestle, if you understand Tata, if you think about ITC, Marico, all these are very, very strong brands, right? And even some of the products have got a very good brand name around it. So if you think about Fevicol, if you think about Xerox, these are actually products. If you think about Cerelac, if you think about Maggi, these are all strong brands which kind of creates a strong perception in the minds of consumers and protects a company from a competition. So that is called competitive advantage. The second competitive advantage any company could have is switching costs. If it is so difficult for you to switch from one company to another, let's say if you are an Android phone user, to switch into iOS is very, very difficult. To switch your bank account is so difficult. To switch your demat account is so difficult, right? So all this is again a powerful form of competitive advantage which a company can have. One more form of competitive advantage is called network effects, where every new customer that comes and becomes part of that ecosystem creates more value for other customers. Think about LinkedIn, right? Each new user coming into LinkedIn creates a positive experience for others. Think about companies like Amazon or Zomato, where each new user can give more reviews and there is a positive experience for other users as well. Think about WhatsApp, right? Where one more person comes in, a lot of other friends will benefit from that person coming into that ecosystem. So that is also a very, very powerful form of competitive advantage. Another form of competitive advantage is if you can sell things at the lowest possible cost and still maintain the quality. And that generally happens with another competitive advantage, which is called economies of scale. If you can scale so much, you can generate big volumes that you are able to sell the same product at a much cheaper price. For example, DMart, if you think about it, they buy in bulk and they are able to sell the groceries at much lesser prices than the normal grocery shops can sell it, right? So this can be another competitive advantage. Finally, there could be a advantage in terms of patents and IP. If you have a strong patent which is filed with government, you have a right to only produce that product. It happens generally in pharma and chemical industry, where you produce a drug which only you can sell it, nobody else can sell, even if they know how to do it. By law, by regulations, you are protected. Okay, so this is C for competitive advantage. H is called high ROCE, return on capital employed. Like how you can generate higher returns is also a very, very powerful advantage you can have. I stands for improvement in the company. So it could be improvement in terms of strategy. It could be improvement in efficiency. It could be improvement in the pricing power, and so on and so forth. N is new in the company. If a company is launching a new product, it is going into a new geography, their sales ultimately can grow. And E is finally the jockey, the promoter who is running this company. If the management is not able to execute the opportunities and the earnings growth possibilities which are there with the company, then no matter how the environment is, the company will not be able to grow to its fullest potential. So you need to also understand, while selecting the company, you also select whether there is a right management for that company or not. Otherwise, despite having all the right triggers, your company might not generate the returns which you might want from that, and it might not grow the way you think it can grow. So these are the principles. Out of that, if you want to think about earnings growth, there are 4 parameters you need to learn about it. So the first parameter is how the sales of the company can grow, right? So think about how different ways the sales can grow. The second is operating leverage. The third is margin expansion. And fourth is debt reduction. So these are the 4 cylinder. If you go through any annual report, if you go through any con call, if you go through any of the PPTs, if you see any of the questions asked by research analysts in the con call, the questions will revolve around only and only these 4 parameters. So if you see the slide, these are the 4 cylinder, I call 4 cylinder model, again coming from a mechanical engineering background. But if you analyze these 4 cylinder, you can pretty much analyze any of the businesses which you want to, and you can actually go deeper into this. Okay, so what I'll do is, in the next video, I'll dissect how to think about the framework, and we will do a live practical analysis of how, using all these 4 parameters, you can actually analyze any company which you want, and that could be a very good starting point for your business analysis. So thank you so much for watching this video. Hope you got some initial pointers. Hope you understood the broad machine framework. And in the next video, we are going to go deep and dissect all these 4 parameters and practically understand from one of the case studies how to actually do this. So thank you so much for watching. I'll see you in the next video.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.